Alright guys, welcome back to another video, and for those who have been curious to where I've disappeared off to, I recently ended up moving, so as you can imagine it's been a very hectic few weeks, and let me just say I don't recommend moving during a global pandemic. We still have a lot of boxes to unpack, but more or less settled in, and I'm just excited to be back producing more videos for you guys. And the best part of the new place is I get to enjoy a view like this while I do the dishes. That's something I'm looking forward to. But let's get right into it with some news headline and stick to the very end where I'm going to be giving my portfolio update, because what used to look like this now looks like this. And I'll explain why I decided to stop taking advantage of M1 Finance's biggest differentiating factors to other brokerage firms. And the very first news update is regarding the impending USCIS shutdown I talked about in my last video. The original date of the furloughing of their 70% of the workforce was supposed to happen on August 3rd, but it looks like they were able to delay it until August 30th. If you scroll down here, this delay is intended to allow Congress enough time to act and provide USCIS with the funding needed in order to avert the administrative furlough altogether. So we'll see what happens with this situation. In addition to the Senate GOP's Coronavirus Relief Bill, HEALS Act, currently being debated in Congress, and there's lots of divisive issues that will need to be ironed out before anything happens, so it's just a waiting game, unfortunately. Like this shenanigan, how is this going to help people affected by the coronavirus? I mean, I'm not really sure, but I'll leave the politics to the politicians. But moving on, the pandemic has naturally upended a lot of things, and even though the stock market has been on a massive recovery rally, one aspect of the business landscape has taken a massive hit, which is mergers and acquisitions. According to data from Refinitiv, mergers in the United States have plunged 83% thanks to the ongoing pandemic. And while there were 2,064 mergers and acquisitions announced in the most recent quarter, which totals $106 billion, compared to the same quarter last year, that figure is nothing. As you can see, in the second quarter of last year, the total was almost $623 billion. And whenever companies merge or acquire one another or get acquired themselves, there is a lot of internal shuffling that happens to combine the two somewhat completely different companies into one entity. And arguably the biggest thing they need to figure out, as vain as it might sound, is what the newly established company will be called. But of course, this isn't always necessary when it comes to acquisitions. Berkshire Hathaway, as you can see, has a plethora of companies under its umbrella, and they operate under their original names like Dairy Queen and Benjamin Moore Paints. But things get a bit different with mergers. Some choose to adopt a name that is more well known, as in this case with Honeywell. When Allied Signal merged with Honeywell back in 1999, Allied Signal was a much larger company, but they ended up choosing to retire the Allied Signal name because the Honeywell brand name was known around the world. That's why if you look up this company, it currently goes by that name, Honeywell. But the merger I want to talk about and the naming of the company I want to talk about today is that of Fiat Chrysler and PSA Group. And this merger is going to create the world's fourth largest car maker by volume. And for those of you who are not aware, Fiat Chrysler, they own Alfa Romeo, Chrysler, Dodge, Jeep, Maserati, while the PSA Group owns Peugeot, Citroën, Opel, and Vauxhall. I think that's how you pronounce their name. So one company is United States based and the other company is European based, and they ended up deciding to go with this following name, Stellantis. My first thought was, sounds like those antidepressants you hear about in those pharma commercials, or is a sister city to Atlantis? And the name Stellantis is based out of the Latin verb stello, which means to brighten with stars, and thankfully Stellantis is just going to be a corporate name, so you're not going to be able to buy a Stellantis Grand Cherokee or a Stellantis Challenger Hellcat, which is a good thing. They'll still retain their original name, Jeep and Dodge, and Chrysler, Alfa Romeo, Maserati, and things like that. But I'm sure we'll get used to the Stellantis name, which is once again a corporate name, like we've gotten used to other corporate rebrandings. For example, take Verizon. In 2000, when Bell Atlantic bought GTE and changed its name to Verizon, which was a combination of the word veritas, which is Latin for truth, and horizon, I'm sure a lot of people were just as confused and shaking their heads like they are with Stellantis right now. So let's just give it a few years, but I guess for now, if you want to find Stellantis, you can find it on the CVS aisle number 6. And to finish off this video, like I mentioned in the beginning, I'm going to update you guys on my M1 Finance, my retirement portfolio, and the total of my 4 different accounts that I have with M1 is now $21,299, which is a $2,000 gain since my last video. But as always, for full transparency, let's break down that figure. So So once again, the C column is going to show the information from my previous video, and the D column is going to show the information that I inputted today. And overall, I'm currently up 15.35% since I started investing with M1 Finance since September 6th of 2018. And in the same time, the S&P 500 has gone up 12.08%. So I'm slightly ahead, but as always, doesn't change in the short term. I can be behind the overall market. But, I'm in this for the long term, so it's best not to get swayed by the daily fluctuation. And speaking of fluctuation, that's exactly why I took my clearly organized portfolio into this jumbled list of 51 different stocks. And for those who don't know, M1 Finance allows you to group whatever stocks you want into pies. As you can see, I used to have my 51 stocks in 5 different pies, comprised of either technology, dividends, consumer, industrial, and real estate. And you are able to set percentage of each pies, and that determines how much of the stock is going to get purchased when you place a buy order. For example, let's say I was going to buy $100 worth of stocks. $19 is going to go into my technology pie, but because of my technology pie is currently, as you can see, 21.2%, is way ahead of that 19% that I've originally allocated. So M1 Finance is going to automatically choose not to invest in technology, but it's going to choose stocks that are currently underweight, like in the real estate pie or in the industrial pie, because they're currently 17.8% and 18.2%, which is below the 19% that I've determined. But the issue is that even though the technology pie is higher than the 19% and is currently considered overweight and no new money is going to flow into it, there's stocks within that technology pie that are underweight, and while they should have been bought, because the overall pie is overweight, M1 Finance isn't buying them. And this is the breakdown of my technology pie specifically. And as you can see, the only reason this pie is overweight is because of Tesla. And even though I've set Tesla to be only 10% of this pie, because of the massive rally that has been on, is now overweight and is comprising 16.5% of my overall pie. As a result, this pushed the overall technology pie to be 21.2% instead of my predetermined level of 19%. So it's not going to be able to buy the underweight technology stocks like Uber, Visa, MasterCard. And these are the stocks that are considered underweight and should be getting new money. But because of this tech pie has gotten so big, it's not going to do that. So even though I really wanted to keep an organized portfolio because of that issue, my portfolio looks more like this. 51 different stocks all over the place with no categorization of anything. But the good thing is now M1 Finance, when I end up choosing to buy more stocks, is going to buy the most underweight stocks, regardless of if that stock is a tech stock or a real estate stock. So to show you guys, if I go over here and I place a buy order for $100 and I click continue, it's going to buy these 19 stocks. And as you can see, we have Ecolab, which is part of my dividend pie. We have Boeing, which is my industrial pie, and we also have Uber, which is my tech pie. But because it is underweight compared to these other stocks, it's going to buy more Uber. And if you look down here, it's also going to buy a bit more of MasterCard, which is also a tech stock, and also Facebook, which is another tech stock. So we'll see how this goes, but I think this is going to contribute to more of a balanced portfolio that is closer to what I've set for my allocations. As you can see on my target allocation, all of these individual stocks are going to be 2% of the overall portfolio, which is in line with what I had originally. It's just not going to be as organized. But besides this issue, I still highly recommend M1 Finance compared to other brokerage because of its ability to, create pies, and is automatically able to invest those dividends not into that stock that provides the dividends, but to all stocks in your portfolio. So it offers more diversity in that aspect. But if you want a more in-depth review of M1 Finance, I did create that video, so definitely check it out. And if you haven't started on your investing journey, check out my description for links to sign up for M1 Finance, and you'll get $10 free in addition to the money that you're going to deposit. You do have links to other brokerages like Robinhood and Webull, which if you use the link to sign up, you're going to get a free stock just for signing up. But I think I'm going to end it there. That's all for today. As always, thank you so much for stopping by. Happy investing, and I'll catch you next time with more shenanigans.